Hello everyone, this is Juan Sarmiento and today is Friday, February the 11th. Let me just, and the market is going down. I think it's significant. Let me just show you, for example, the Dow. And you can see that it failed to break above the Ichimoku cloud. Now we have a downtrend. Okay, officially, this is a downtrend. And this line would have to be crossed before I can get bullish again. And here is the earlier uptrend that was broken today, was being broken today. In addition to that, you see the stochastics is pointing down. You see the red line going over the blue line and over the 80 point, which is overbought into over, begins to go down, and the volatility is picking up a little bit. You can see here on the VIX, volatility is picking up a little bit here, and that might be significant as we move forward. Today is critical for that. Let's take a look at the NASDAQ, and then in case of the NASDAQ, well, we had a double, I call it the double hump. It got not anywhere near the Ichimoku cloud, so the Dow looked stronger. And well, if you go by Elliott wave analysis, this will be a 1, 2, 3, 4, 5 wave, and now A, B, C, that's the correction, and now I should go and make new lows. That's my guess from what we see here. The stochastic didn't even go to the overbought area, and the volatility is picking up, so that's significant too. And finally, the CDES, same thing here. It went towards the Ichimoku cloud and it didn't do anything. It didn't cross it, and now it's very much weakening here the line, and that I think is significant. And that means this is wave 1, 2, and 3 is now on the go. We will need a confirmation to see if this is a bear market or not. It looks stronger. The Ichimoku cloud is turning red, and I would like to see the previous low to be exceeded fairly quickly. Okay, if it does, then that will be a confirmation that we are indeed in a bear market. Okay, let's look at our situation here. Our account is going close to 100,000. Remember, we started this with 50,000. So in a few years back, let's say monitor tab here, and you can see that so far this year we have close to $7,000 in profit. Last year was a very weak profit, 2,000 or something for the entire year. But we have overall, since we started this account, doubled our money. Okay, so now let's look at each trade here and see what we need to change. I have it organized alphabetically, and let's start with AXP. Let's look at the chart, and it was making new highs. The volatility was low, and as the market, if this market pulls back, you see the volatility picking up. Let's go to the Analyze tab and look at the risk profile here. That looks really good. And you can see that we are $700 profitable. Okay, if the market begins to decline, we would expect an incline, a rise in volatility, and that will be good, even though our deltas are positive. But it's 24, it's a relatively low delta. Okay, while Vega is pretty high, so an increase in volatility would be very good for this trade, and it seems to be going in that direction. Okay, and as you can see, this is a fairly new trade. We have March and June. I believe I entered it not long ago, less than a week. Let's go to Juniper, and in this case we have March expiration here. Okay, so that's good. And let me see if we have, seems like we're losing money here. Let's go to the monitor tab, account statement, and go back, let's say 60 days, just to make sure. Yeah, it's just the one fill, and so far is a loser, but that could change very quickly if volatility picks up, and I think it will. Let's look at TER and show all. Okay, we have February expiration, that's next week. We can do a rollover. I might just as soon wait for next week to do my rollover. Okay, and it looks like we have made some adjustments. As you can see, that's why we have so many. On the call side, at some point we did some adjustments, and on the put side we have this one here, this 110. Okay, let's look at the monitor tab and see. Yeah, we have made plenty of changes, and you can see so far this year we have practically $2,500 profit on that one. I don't need to change anything, I don't think, even though it's slightly delta positive, which is, I find that more interesting, because if the stock rally, we need to be able to make some money. If the stock goes down, volatility will pick up and compensate me for the negative deltas. Let's go to UPS. And here we have made many adjustments along the way, and the latest was we included a new trade here with June 2020, a short March 2020. Okay, so removing those, then we have a delta negative trade here, and we have expiration February, and we have March, all kinds of adjustments here. Okay, so 2023 March and February. Again, I would leave that alone. The market is on the go to the downside, and deltas are negative, so that's fine. But at some point we will remove that and keep the newer trade, which is this one here. You can see that I have the 2020 as the strike price. In the other case, we started this trade as a 210, and we still have those two 210s expiring March, and we have the short puts and calls matching them. So this is like a calendar spread, but then we have one long put at 190. That means when the stock was going down, I roll it down, and now we have a 190 put right there. And on the call side, we did a roll up to 230 right here, and that's what it is. Okay, and so we have 6 legs, and if you could, for example, close the, let's see, the outstanding calls here, the ones that we did the rolls, then this amounts to a long strangle. Okay, that's the one part, and the other part is the calendar. So you would exit the strangle and then exit the calendar. Here's the calendar. Again, just to show. Okay, so you can exit like this. So analyze closing. It's a double calendar, but it calls it a double diagonal. Yeah, this one is with all of them 210, and this is what it looks like. Okay, you may take the profits on that, but right now, without it, it looks pretty good right now as the market declines, right? If it hits 210, well, then you can exit. And the other side is the strangle, and we can select it like this and say analyze closing, and I should say strangle here. 210, we should really be 230. Well, let me show you. This one and that one. So that's 230. And you can see that doing that strangle, it closes that position if you wanted to close it. So those are, you can place those two orders. Right now I don't think I need to. Okay, it looks fine. If you close those, this would what the resulting trade would look like, and without them it looks like this. And I like this cone here as the market declines. Let's go to Wells Fargo now. And here we have February the 18th. Okay, that's next week. So it is, this one would be worth rolling because we're very, very close to the cone. Okay, so you could roll it even though, how many days to expiration? 7 days. So yeah, we can do that rollover. Let's do the rollover and analyze rolling. But the new ones will be to March 18th. Okay, so we're rolling it over 1 month and then you end up with this. Okay, you can do the call side only or the put side only. I think I'm going to do this. Okay. You know, actually, let me look at the chart first. Do I think that the stock is going down or up? Either way. So let's just keep it. Next week we'll see. Okay. Why? Because if it stays in this area, we are likely to make a little more profit. If I do the rollover, I end up with positive deltas, and I think the stock is likely to decline a little bit. So I'm going to leave it like that. I don't have any trades because now the volatility is picking up. I don't want to risk. Let me look at the chart. Let's go to the charts and the daily chart and enter VIX. So the VIX is picking up, as you can see quite clearly. It will go perhaps to 40, and at that time we'll reevaluate. Okay, so market declining. Let's look at the Nasdaq. Very strongly today. So let's look at the trade tab here. Let's take one more look at the Dow. This is a futures again. Yeah, that's picking up quite a lot. Okay, I'm going to tell you. Do I think long term? What would be the biggest clue for me that we are in a bear market is if I see the stock market, the Dow Jones, fall more than 1,500 points in one day. Until that happens, I will call this correction. Why am I drawing that line in the sand? Because I think we have had $1,000 intraday changes in the Dow before. Okay, so it would have to beat that significantly before you can consider it a bear market, and it would have to be news of that caliber that will cause that kind of a change in one day for me to be thinking that we have a long-term bear market. For now, we're fine. Okay, that's all for today. Thank you very much for joining me, and see you next time. Bye-bye.